making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise.
Let me ask you something, man.
Don't stop. I'm not finished yet.
Do you ever ask yourself,
Don't stop. I'm not
when are
finished
they ever
yet.
gonna stop? Do you ever ask yourself, when those bad boys are gonna stop making all that money?
What's up, my future one percenters? This is Marathon Money, brought to you by MarathonMoneyPlus.com. I'm Cam Jones, the prince of the stock market, aka your favorite billionaire's favorite thousandaire, and I'm with the homie Kidney Coins. What's up, man?
Good. Warren Buffett's still rich. Start off. You gonna know why we started off the podcast that way.
You started off the podcast that way. So we're gonna talk about. I guess this is a title that I made up. The dangers of buying and holding. Dangers. Now,
there's no dangers to that.
Well, hold on. There could
unless
be,
you pick trash companies.
There could be danger. Now, over the last 10 years, right? If you would have bought and held AT&T, you down 40%. But you could have been up, right?
Yeah, I know better not to buy AT&T.
They got good dividend right now. I bought some around like $18, $19. I don't know exactly. But you know, that's the problem with buying and holding. Like, you know, you're going to miss out on the upside anyway. It don't matter. No matter what, when you sell, you're going to miss out on some upside. You have to take your profit. AT&T, Wynn Resorts, who else? Carnival, General Electric. You know, outside of Carnival, well, I'll say outside of Carnival and Wynn. You talk about General Electric, and AT&T. Those were considered like safe buy and hold stock. Buy it and don't even look at it for like 10 years. Well, you come back and look at it 10 years, you got less money. That's like,
yeah. I never believed in that type of style, buying and holding. The type of style I believe in is in more like the Warren Buffett style. When the moat change or the leaders change, you need to start looking at the company as a whole.
mm-hmm.
That's the type of buying and holding style.
Mm-hmm.
That buying and hold and don't look at it for 10 years, that's just some guy at Goldman Sachs trying to sell you something. That's all it is. That's a broker trying to sell you something. That's Bank of America, Wells Fargo, all those guys out there trying to sell you on an idea. That's it. I believe this type of buying style holding. Always reevaluate the company. See where they're at. Reevaluate the stock, the company. See if they're still growing. See if that is still the trend.
Mm-hmm.
Once it gets past the 20-day, you need to start looking, is this because of the company or is this because of the condition of the market? That's my styles of buying and holding. Okay. Carnival, that is not a necessity. That is a luxury.
Right.
You know what I mean? You don't need to go on Carnival cruise. You don't.
You need electricity, though, from General Electric.
You need electricity. General Electric has made some horrible decisions.
Yeah, and I don't even think they do electricity. Horrible. They just call it General Electric. They do like
and that's the crazy part. I think people is just buying the name.
Mm-hmm.
They weren't really buying. They don't realize like people that provide you electricity are not even, most of them are not even on the stock market.
Yeah, First Energy is on the stock market. I used to like them, but they're another one that really didn't move past 10 years or so.
Yeah, most big electricity companies are not even on the stock market.
Right.
They're like mostly privately held. You know, so like GE was selling appliances.
Yeah, right. Yeah.
That's what G sold.
But
G sold
it was
appliances.
generally looked at as a buy and hold. Like, okay, you
Hell,
buy
yeah,
this,
it was.
and then when you retire, you're gonna retire with $20 million. Based on our calculation. This is
Yeah,
the Goldman Sachs dude talking to you. Based on our
yeah,
calculation of growing 20% per year, compounded plus the dividend, blah blah blah. You put in $2,000 in 50 years, you'll be a millionaire.
yeah. They ain't no. Dude, the thing about it is the lack of information they have is that they're not looking at the leadership. They're not looking at the or are they changing? Are they staying? Are they growing in their lane? They're not looking at market condition. They're not looking at other competitions.
Right.
Bro, we talk about competition all the time. When we bring up Tesla, we're looking at other competitions. We actually asking ourselves, hey, is Tesla doing their job? Is Tesla getting better?
Right.
You know what I mean? Is anybody else in the EV world that can come up, catch up to Tesla, maybe touch Tesla's back of his head in the race? You know what I'm saying? We always bringing that up. You can't say we don't because anybody can get replaced.
Yeah.
Ford is not number one no more.
Used to be.
Used to be. Ford is not number one no more. They're the first person to create cars, but they're not number one no more.
Right.
That's what I'm saying. Anybody can get replaced from being at the top of the mountain. It's very simple. Amazon could get replaced. Apple could get replaced. It's possible.
Yeah, it's possible. Not likely, but it's possible.
It's possible. Look at I'll give you some prime example. Let's look JC Penney,
Blockbuster.
Blockbuster, all top of their fields.
Yep.
Number one in the game.
Sears.
Macy's. Sears. Oh, Sears is number one. Everybody, dude, for a good 30 years.
Mhm.
Good 30 years. The only way you're gonna get your appliances,
Sears.
Sears. Because for a period of time online, you couldn't really order them online. You literally had to go in store and bought that.
And also, the only way to get electronics was Radio Shack
Yeah.
for a long time. For a long time, they were number one at just consumer electronics. But then, Best Buy.
Now, if you buying and holding, not pens, intention, and none of that, that's where I see is the biggest, hugest buy and hold mistakes.
Right, I agree. I don't agree with people. They're like, "Oh man, I just buy the stock and then I don't look at it." Like, nah. If you have to pay attention to it. That's your money. Like, you gotta pay attention.
You gotta be an active investor.
Right. You can't just wait like for the yearly, annual report to come out and you looking at stuff. Like, nah, man.
You gotta be an active investor. That you really got to. You gotta be an active investor. Out here.
And also, you got to have that plan. Like, like you said, like, okay, it's over the 20-day. How much profit did I make here? Is it worth keeping it? What are they doing? Are they growing? When's earnings? Like, I need to know when is earnings. You know what I'm saying?
Yeah, and people like I like to do this. I like to bring up Warren Buffett. But the truth is, if you ever look at Warren Buffett's like portfolio, he's constantly buying and selling.
Yeah.
It's the same 20, 25 companies, but he's constantly selling shares. He's constantly buying more shares. Because if things change, bro, you want to lower your position. Definitely if you're playing the long game.
Here's my problem with Warren Buffett and people like you that bring up Warren Buffett's style, right? Warren Buffett got rich at, I feel like there was no real skill to how Warren Buffett got rich. He just picked, and it sounds like I'm hating on him, but I'm not hating on him. I don't feel like I'm hating on him. Maybe I am hating on him. But Warren Buffett got rich in the 50s and 60s off of that stuff. You're not gonna. The game ain't the same as it was back then. So I feel like
even Warren Buffett acknowledged that the game's not the same.
I don't feel like he acknowledges it. I mean,
yes, he does. He says it all the time.
You figure
the game's not the same.
He hates on crypto. He hates on Robinhood. He hates on commission-free trading. so he doesn't recognize that the game is not the same. He recognizes that companies move
Pickings.
forward, technology
Yeah.
helps companies. He recognizes that, but he does not move with. He doesn't move with the same aggressive energy.
That he used to move. First of all, he's old, bro.
But I just feel like if you did Warren Buffett style today, if you took the same style that he did in the 50s and 60s and applied it today, you wouldn't. I don't feel like you make as much money.
Yeah, you actually would. Cam, you did it 3 times.
Duh, I no. So okay, check
Yeah,
this out.
yeah,
Hold on.
yeah, you did. Here's what I'm saying. Teledot. Let's think about.
Okay, I knew you were about to say
Warren
that,
Buffett. No. Let's think about that. Warren Buffett was said he would go through books and look for the most undervalued stocks. You can't remember. He said he couldn't afford blue chip stocks. He couldn't afford mid grade stocks, so he had to find undervalued cheap stocks at the bare risk at $8, $9, $10.
Mm-hmm.
It's the same thing. You could still do it now. What makes it difficult now is just there's more companies.
Mm-hmm.
There's way more companies doing the same thing. Back in the day, Warren Buffett, you only had a few companies doing the same, only few companies in one industry. Microsoft was alone for years.
Yeah.
You know what I'm saying? Like, just like Amazon nowadays. Amazon buying, and realistically, Amazon in its space is really by itself.
Right.
For years. It's not, that's what I'm saying. When you have a whole bunch of those type of companies between the 50s, 60s, and 70s, hell yeah, it's a lot easier to pick stocks. Hell yeah, it's a lot easier to find more undervalued stocks. But look at the EV space. When there was just 3 or 4 or just one, you have no choice to go with Tesla.
Mm-hmm.
And obviously Tesla's going to be successful. You know what I'm saying? Because you're the only one out there doing it. So obviously you're going to get successful. That's why it was easy. Now, does the same way work? Yes, it does. It's just a lot harder now.
Here's why the Teledot situation does not apply. And Zillow. And Square. And Twitter. Because of this. Under Warren Buffett's style, I would still have Teladoc right now. I would still have. Well, I ended up selling Square and then I bought some back. But basically, I would still be even though I could have sold it at $250, I would still have Square right now. So I would have. That's the problem with the buying and holding.
His style is actually every time it goes up a certain percentage, he's trimming off the top. That's his style.
Mm-hmm. He's
taking, like, say he buys 1 million shares and it goes up, it goes from $30 to $70. He's taking like 250,000 shares off the top.
Mm-hmm.
Now he still might be holding the stock all the way down back to 50, but he made all his money back and plus some. That's really style. He does hold stocks forever, and he adds on to the position when they're lower. But to tell you the truth, his style does work for long-term periods of time. It does. Eventually, it does. Because, like, if you buy the Dow at 21,000 and you ride it up to 35 and you take off 30% all the way up, and then when it goes back down to like 25,000, you buy a whole bunch of shares again, it's the same thing. You're just in one investment for a long time. Definitely if it's a good investment.
I agree with you, but buying the index versus buying normal stocks,
individual stocks
is
different.
It's different.
Yeah.
You could now if I was gonna buy and hold something, it's definitely gonna be a SPY or a Nasdaq or a Dow index, something like that. If I'm gonna buy and hold and not look at it for a certain amount of time, it's gonna be one of those, because the stock market in general is designed to go up over time. In general, the general stock market, and when you're buying the Dow and the Nasdaq and the S&P and the Russell, you're buying the general stock market. But as we all know, individual stocks do not roll like that.
No, of course they don't. But most of Warren Buffett's picks are embedded into the economy.
But
90% of his picks are embedded into the economy.
I would say they aren't. I wouldn't say that they aren't. I would say that that's not. I don't think every stock that he has is not something that you absolutely need.
Which ones?
I don't know. I just know it's.
Because every single one he has, Apple, Coca-Cola, McDonald's, all of them are embedded in the economy, pretty much.
He has other ones.
I know he does. But again, Microsoft, all of them are embedded into the economy. It's what really all of them is what really pushed the market forward, the overall economy forward. All those companies.
Mm-hmm.
Train tracks.
Yeah,
I can't believe people still use
I can't
use that. But yo, train tracks still makes trains still make $10 billion, bro. $10-20 billion. It's still profitable.
Mm-hmm.
That's
but
the crazy part.
It's not. It's profitable. It's not a growing. It's
No,
not a
it's
growing
not.
sector though. You know,
It's not a growing sector.
if you want your money to grow, you got to be in a growing sector. You know, technology is a growing sector.
But my point I'm trying to tell you is that if you got my point, every stock he picks is already embedded in the economy.
Mm-hmm.
So if you got Warren Buffett type money and you buy $40 million of Apple and you getting what 2% dividend, you getting a lot of money.
Right, of course. But that's not how our podcast is designed for the normal person. Normal people ain't spending 20 million on no.
Of course, that's not my point is if we start out, you gotta remember Warren Buffett started out broke.
What's broke? Define broke.
He started out broke. He worked basically his story is he started out working for this guy, end up buying like what you call it, those video games machines, arcade machines. And then that's how he started making money and invested in his first stock at 10. Then he worked for Benjamin Graham for free for years. And then he didn't really make his first million until he was like 28. But he was essentially broke. Like his family didn't have nothing. You know what I mean? So like that's what I'm saying. Like if he could the idea of how he found his first initial couple stocks is the same way. It's just more diluted. It's no different from cryptocurrency. When it was just Bitcoin, Litecoin, and Stellar, Ethereum, it ain't that hard to figure out, you know what I mean, which one was better. It ain't that hard to go like, all right, I'll just buy all four. You know what I mean? So if you like, for example, let's go back to 2016. If you bought Bitcoin at $200 in 2016, you bought Litecoin at $2 in 2016, you bought Ethereum at $50. You know what I mean? You would be dumb loaded. But also you gotta think there was not that many cryptocurrencies out there. There was really under 100. It ain't that hard to figure out which one's who's better, who's not.
Right.
Ain't that hard. Now there's 40,000. It's damn near impossible. It's the same. You know what I mean? It's damn near impossible now. That's my point. That's his style. It just happens to be at the time he did it. It just happened to be a good time to do it. It doesn't mean it doesn't work. It does work. You just have to be more disciplined. You have to have more research. You have to do more work. You know what I mean? But it does work. It's the same. That's why I'm saying the Teladoc thing, the Square, the thing. It took tons of work, but it wasn't that hard to figure out when Teladoc was the only person that knew how to do it.
Right. Yeah. You're
That's
right.
When you're the only person in that space, it ain't that hard to figure out. Okay, you're gonna make the money.
Right.
You know what I mean? Then once people figure out, oh yeah, this is easy. That's what happened to the stock. People figured out it was easy. It ain't that hard. It was Skype. It was Skype. You know what I mean? But that's my point. It's like Square was the only one really doing what they were doing out there. You know?
I'm just thinking back to like because a lot of people they reference Warren Buffett, right? Uh, but like you said, it's a lot harder to do what he did. And I know I was just saying like, yo, if I had this, I still have it. Think about Carvana. You know what I'm saying? It's a lot of stocks that I had that, I didn't sell them at the top, but right now you look back at it, they like 50% down from where I sold it.
Of course,
you
the
got to
same
stay
thing.
aggressive.
Carvana, I sold that thing at the tippy top. I knew that was not gonna last. Car companies don't last, man. Like stuff like Carvana, it's just another gimmick on the road.
I don't agree
Real
with
talk.
that. I don't agree with that.
I do. It's you're still selling cars, man.
You are selling cars.
You just selling it in a different way. It was just like CarMax when CarMax came out. That's it. It's no different. Remember when CarMax? Oh, you don't have to worry about salespeople. Our salespeople don't worry about it's CarMax, bro. It's just CarMax. It's a better version of CarMax.
With the
They
car
deliver
vending
your
machine.
car to you. Yeah, they just deliver your car to you. It's just a better version of CarMax. And then when people figured that out, and then people realize they still have to go through the same trouble, just like they do at CarMax when you buy a used car, then slowly people realize it's just a better version of CarMax.
Mhm.
And that's it. You still have to deal with the same problems. You still have to deal with the car. Yes. Me personally, I'd rather use Carvana than CarMax because you got that 30 days, 14 days to return the car,
Right.
which I personally think is stupid.
Yeah.
To me, once that car leave my possession,
It's yours.
I
Yeah.
don't know why Carvana's doing that because me, I'm gonna drive. If it says you can't drive it more than 1,000 miles, I'm gonna drive it right up to 900. I don't want this car. Straight up. But that's me personally. There's very, very few unique companies out there. It's very few.
Mhm.
And we all know them. Apple, Google, Amazon, Tesla. What else? Nvidia.
When you say
There's-
unique, what do you mean by unique?
They were the first people to do it in their field.
Okay. All right.
That's what I mean by unique. There's very few companies out there that are doing anything different from the next. They might do it better. They might make better profits. They might have a better system. But at the end of the day, it's just all they did is took the same wheel, tuned it up a little bit, and drove it smoother. That's it. Affirm. Affirm is a prime example of that.
Ooh. Affirm.
Affirm is a prime example of that. It's a credit card company online.
A credit card company that does personal loans, basically.
No, it's layaway.
That's all it is layaway. Yeah.
It's layaway, but they just give you the stuff first.
Yeah.
It's really layaway. Buy now, pay later. It's layaway. And layaway was save now, pay later.
Right.
Put it away for yourself, and you pay it later.
Right.
Pay it off slowly. It's just layaway backwards. That's it.
Which I don't know why you would do something like that, but I mean, I guess it's working for them. I mean, they fell from 176 down here to 23, but they still $6.7 billion market cap. So it's not absolutely awful, but
So I do kind of agree with you with the buy and hold. If you're not an active investor, buy and hold ain't gonna work for you.
right.
You might as well just use your 401k, get a little 401k. When you get your Roth, put all your money into index funds. If you're gonna do the buy and
Right.
hold.
Exactly. Yeah.
If you're not an active investor, I would even buy stocks. I'll just buy straight up index funds. I won't even waste my time.
Because you got this stuff moves fast, and it doesn't matter the time of day for news to come out. Don't matter.
Oh.
Tesla came out with those delivery numbers 2 weeks ago on a Saturday. that they deliver like
Yeah.
250,000 cars, and then Monday you ain't, pre-market, you ain't even got time to react. They didn't already tore the stock up. You know what I'm saying?
Yeah.
But that's the kind of stuff that happens when you're not an active investor, when you're not constantly checking. You don't know that, okay, Tesla going to report deliveries. This could be good or bad. Tesla going to report earnings. This could be good or bad, or, whatever. You're not
That's
up
why
on
it's
that.
better. That's why it's better to just, if you're gonna be an active investor, 20 stocks is good.
Mm-hmm.
20 solid stock picks is good.
I
You
would,
don't really. What are you gonna say?
I would say that 20 stocks, yeah, that's good, but you don't have to get 20 though.
No, you don't. I'm just saying, like, for it to be manageable,
Uh-huh.
20 solid. Because, like, I could put 20 solid stocks that everybody can buy and manage right now that won't give them the headaches. It's when you start picking the scrubs, the tier 3 stocks. Those are the ones you got to watch out for. You know what I mean? The ones that are the risky plays.
Mm-hmm.
You know what I mean? Those are the ones that you got to pay attention to. The ones that at any moment could be a falling knife.
Right. I agree with you. I agree with you right there. The tier 3 and scrubs.
Oh,
That's a real thing though. Check Marathon Money Plus out. It's real. Uh, but um again, I don't want to sound like I'm hating on Warren Buffett, because I don't never hate on people that got money. I don't know why people
no,
hate
but
on
like,
people with money, because that's what we trying to do, trying to get money.
it's not really hate. It's just a realization.
Mm-hmm.
Like I know I know how you made this money. It was just a good time
Right,
period.
right. Yep.
And you could say that about crypto. If you got crypto before 2017, you was in a good time period.
Right. Yep.
There was not many cryptos out there. And if you got Tesla back in what, 2012,
Yeah, you
it was
bought
a
them.
good time period. It was $100 before the split. You know what I mean?
Mm-hmm.
That's what I'm saying. It's like, once you realize that, it's not saying that it doesn't work. It's just like, sometimes things work in a time period. That's it.
Right.
Things work in a time period. That strategy is based on a certain time frame. This is no different from Teledocs, no different from Square, no different from Zillow, no different nothing. When you're the only one out there and there's nobody else doing the same thing, it's gonna make money.
Yep. Yep. Well, man, I think we gonna leave it right there. So, man, you can find me anywhere at Camboni11, CAMBONI11, on Snapchat, Twitter, Instagram, StockTwits. Make sure you download that Trader Champ app in the App Store. And where can they find you, Kenny?
Yo, KennyCon23 on Instagram, Kendrick Collins, 2 ends in the middle, on Twitter. Yo, hit us up on Marathon Money Plus. Hey, man. Yo, have a wonderful day. And yo, I'll start looking at stocks. Start looking at stocks, man. It might be the time just to have your picks ready
Yep.
to start buying up, because it's getting that time where majority of stocks are low. Disney's down, Apple's down, not too much, but Amazon just split that 115. Start looking at some of those, because there might be opportunities for you guys to pick up, and 2-3 years from now it might be a different ball game for a lot of y'all.
Yeah. Yep. Yep. So, all right, man. Next week.
Peace.
Peace.